just help everyday people, doesn't matter, individual operator or business, go from credit to capital. Our job is to get people in a better positioning for things that everyday people or business owners need in life, whether that's a new home, they want to get a new car, they need capital for their business to grow and scale, they're looking at some type of real estate investment project. Usually credit's always an afterthought because most people don't understand it and they don't really know how to navigate it either. And then on the flip side, because of those things, those capital things I just mentioned over the last couple of years, we became a business funding broker as well, helping people acquire SBA loans, lines of credit, equipment, 0% credit card stacking.
Quick favor before we jump in. It always surprised me that a large percentage of people who listen to the show regularly haven't yet subscribed. If you're a commercial real estate operator, investor, or builder who values conversations like this around deals, capital, and technology, please take 2 seconds and hit subscribe. It's a simple, free way to support the show. My commitment to you is that my team and I will continue bringing you higher level operators, stronger conversations, and real execution level insights every single week. Thank you. I truly appreciate it. Welcome back to the AI Edge podcast, where we sit down with operators, founders, and business leaders who are actually in the arena building real businesses. We break down how they think, where things are working, where they're breaking, and how they're navigating scale at real time. Today, I have Dave Burgio, owner and operator of Trifecta Credit Solutions. Dave helps entrepreneurs, operators, real estate investors, and everyday borrowers move from credit problems to capital access. What I like about Dave's perspective is that he talks about credit positioning, business credibility, lender readiness, and becoming fundable before capital gets urgent. And in the current market where lending is tighter, capital is more expensive, and operators cannot rely on yesterday's playbook, that conversation matters. So today we're going to talk about credit, capital readiness, real estate investors, funding strategy, mental toughness, fitness, and what Dave calls the ultimate life test. Dave, welcome to the show.
Lewis, thank you for having me, man. I greatly appreciate it. It's good to be here.
Awesome. So let's start right here. When someone asks you, what do you do? How do you usually explain that?
I just help everyday people, doesn't matter, individual operator or business, go from credit to capital. I keep it simple. It's everybody needs money, right? And most people, usually credit based on statistics, is always a barrier or some type of problem of them acquiring that capital.
Excellent. What does Trifecta Credit Solutions actually do behind the scenes?
Yeah, so we do a couple things, obviously, that line all together. First is obviously credit on the personal and business side, consult on the positive side, building positive profiles, business, personal profiles, and we help by utilizing the laws of the Fair Credit Reporting Act, the Fair Debt Collection Practices Act, and look to clean up any negative items or any blemishes based in the law. And I say that because there's a lot of people out there that guarantee that this stuff can happen. And that's full disclaimer. That's not true or half truth to that. But our job is to get people in a better positioning for things that everyday people or business owners need in life, whether that's a new home, they want to get a new car, they need capital for their business to grow and scale, they're looking at some type of real estate investment project. And usually credit's always an afterthought because most people don't understand it and they don't really know how to navigate it either. And then on the flip side, because of those things, those capital things I just mentioned over the last couple of years, we became a business funding broker as well, helping people acquire SBA loans, lines of credit, equipment, 0% credit card stacking, and so forth. Obviously, helping business owners acquire those things from other people in the business funding sector. It just made sense for us. It was kind of a learning process over the last 3 or 4 years of how that works. COVID on accident kind of shifted us to there as well. And then over the last, year and a half, we got into the direct private lending space for the same reason. We had a lot of newer investors or even seasoned investors that, credit is always at the back end. It's nobody understands that, hey, I should be able to get this and why can't I? And so that created an opportunity with an old friend that's been in the space for a decade and reconnected, partnered up, and it just made sense. And yeah, that's who we are. Credit to capital, as my tagline says.
Yeah. So you used the phrase credit positioning to capital access. What does that mean?
Credit positioning, again, credit's like, it's almost like a unicorn, right? People don't really understand how it works. It's really comes down to a couple basic things. There's no secret sauce to it. There's no special hack. And I always say, control your controllables, right? It's make sure you pay your stuff on time, pay your bills on time, and keep your credit card utilization either as low as possible. I mean, there's other ways you can navigate that. I'm not going to get into that. You'll probably lose people if you get into the intricacies of really how to do all that, but keep your credit card bills as low as possible or your utilization as low as possible every month. And then just understand those two things are 65% of your credit score that you can control. And most people have a lot of assumptions. Okay, I was late one month, but now I'm caught up, I'm paid, and I should be good. Well, no, that negative item, that 35%, you're probably going to lose 100 points. And if you do nothing about it or get some type of goodwill, it's going to be on there for 7 years, right? Yeah. So, and on the flip side with credit card utilization, okay, I have $10,000 in limits. And this is where business owners typically get caught up in this because they're using personal credit cards. All right, 10 grand on here. I need to go buy something for 9,000, right? Okay, I'll pay it off in full next month. But then now I'm in the middle of buying a house or I'm about to sign a new car deal or, something like that. It always, for whatever reason, it always seems it works out that way. But the moment that 9 grand reports, it's 90% utilized, right? That line itself is 165 points. So now say you lose 150 points and now you're not lendable for that new car because of just not understanding how this stuff's calculated. And again, when anybody understands those two basic things, you can navigate pretty much anything in the credit space that you need to.
What are people usually thinking when they first come to see you?
I think they're looking for an understanding, on the credit side, at least they have an issue, meaning that it's never they're coming to us for credit first. It's always, hey, I can't get this, right? I can't get approved for a home, or I can't get approved for this business loan. Or, I tried to get solar and I can't get approved for that. It's always the afterthought. That's where the capital comes in. They're looking to understand why. And I find it fascinating. We've been running an ad campaign recently, and I can't believe how many other companies in this space just don't explain this stuff to people. Just to kind of say, hey, this is what it is and this is how it works. Nobody really knows. And I think it's two things. I think not only in our industry, because you have some bad players, but I really think financial and lending institutions, they want you to not have the knowledge, right? I heard a very good quote one time, and I use it all the time, it's your debt is their asset. So if they can make more money on you because of lack of knowledge, equal higher interest rates, worse terms, I believe they're going to do it. It's in the best interest of them. The banks are always going to win regardless. So if they can make a little bit more money on you not having the knowledge of how this stuff works, well, of course they're going to do it.
Let's talk a little bit about your story. Before we get into credit and capital, I want to understand your journey. How did you get into this business?
I always say kind of on accident, right? I think on accident and curiosity. My parents' divorce when I was a kid was the first time I ever heard credit, right? My mother, after they were divorced, my brother and I, we lived with my mother most of the time. We would see my dad on the weekends, and completely different opposite lives at that point. My mom had a job, lived in the house my dad built when we were kids. I'm talking, I was 7, 8, 9 years old at the time, like early 1990s, still lived in the house that my dad built when they were together. So we were there, but she didn't make a lot of money. I'm surprised, like, we even lived there as long as we could, that she could afford to scramble to keep it. And then my dad, on the flip side, he had a 2-unit that he owned, and he lived in the first floor of a 1-bedroom apartment. He had his business up and going. He was starting to make money, but he was kind of living in a rough part of town in one of his rental properties. But I never understood. It's like, okay, yeah, my mom's struggling, but has his house. My dad, he's starting to make a little bit of money now, but he's still living here. But the one thing that always caught my attention is they both complained that they couldn't change their situation because the divorce ruined both of their credit. And I'm like, okay, well, that's interesting. And then fast forward a little more. I had one teacher said, I think it was the 6th grade or 7th grade, said, hey, you get one credit card in your life, you use it and you pay it off in full. And I was like, okay, well, that's interesting. And that always stuck with me too. So fast forward 18 years old, what did I do? I got, late 90s, right? Early 2000s. Discover used to start sending people applications for their 18th birthday. So I applied. I got my first credit card for $500 in 1999. And I used to go out every weekend with my high school girlfriend and buy dinner, pay it off in full, write a check, lick a stamp, send it in the mail before online billing kind of came to fruition. And then I kind of repeated that process over the years. I bought my first house when I was 20. I financed my first car. Kind of, it was a toy at the time, but I didn't want to spend the cash. So I financed that when I was 21, and I was on the high side of things. Okay, I'm 21. I own a home. I have a car, and I got credit cards, and I have limits. And then fast forward to 2008. And then I'm sure you know where I'm going with this. So everybody got smacked in the face because of the economy at that time, me included, had to use a lot of credit for certain things. I was breaking into the finance industry at that time, so I didn't have steady income, and then ended up getting kind of left out of that company because they were kind of going down because of everything. People were struggling. So now I'm on the flip side. Now my credit's shot, let some things go. And then I kind of clawed my way out of it. By 2012, 2013, I thought I did a lot of good things, but I made a lot of silly plays, like looking back on it, spent money to creditors that I didn't have to. And then I took one course locally in 2016 that changed the landscape of everything. And that's where my credit journey 10 years ago then is to there today. So I started off as a side hustle in 2016, started working on the side for local lenders and helping them get their clients approved. And it just kept rolling and rolling and rolling locally, just that kind of word of mouth. And then we launched Trifecta in 2020. And here we are today. The brokering kind of happened at like 2023, 2024, and then the real estate a year and a half ago. And fast forward to 2026, here we are.
I love it. You're also co-owner, operator in the fitness and food space with Muscle Maker Grill. What did that teach you about business?
Oh man, you're going way back now. Man, I don't even know where you found that. Man, that's crazy. Muscle Maker Grill. Wow. Yeah. So that kind of goes back to my dad's story. So my dad had a Dunkin' Donuts that he started with my grandfather, and that's where the whole food side kind of came from. So I grew up in the food and beverage industry. I only worked for my dad, probably broke a lot of child labor laws that would be frowned upon today. But yeah, that's where that came from early then. I worked in a pizzeria while working for my dad for the better part of almost 18 years on and off. And then Muscle Maker kind of came right around the same time or right before I really just started looking into credit. We had a Muscle Maker Grill with another family member of mine. Obviously it didn't pan out. We went our separate ways, and I was actually still doing credit on the side when we had Muscle Maker at that time. But, being a lifelong person in the food industry, the credit spot was kind of a change that I needed at that time. Food's tough, man. And I think a lot of people have this glorification of the restaurant industry. I mean, that's really all businesses are 24/7 per se, but that one really is. I mean, you're open at odd hours. We were open till 9, 10 o'clock. The Dunkin' Donuts was 24 hours, right? I've been in there a couple times at 1 a.m. working. That gets to you after a while. But yeah, that whole food journey from then kind of led up to where we're at today, just from old school hard work and from an old Italian American family.
What did that operator experience shape in the way that you work with entrepreneurs today?
I think it it taught me actually a lot of really valuable lessons, not only from working with my dad and understanding how that kind of decade worked out, but it also carried over in the Muscle Maker and taught me a valuable lesson that you have to be really keen in times and market and a shift. I mean, you look at today with AI, right? Back then with Muscle Maker, when we first started, we thought because, hey, we worked in Dunkin' locally. People knew who we were. Like, yeah, we're going to crush it, man. We're going to come in and open the door. The floodgates are going to come. And, that wasn't the case. Like, those Cinderella stories don't last long. But now a lot of things change. Like, back then we were typing in manually all sales, right? And whatever cost, like at the top of mind, and taking a lot of cash. Then, you're talking 2013, everything was a POS system. A lot more things were automated. Food cost was a lot more expensive. Having a franchise that's different from Dunkin', that franchise was a lot different. So you're dealing with different personalities as well. And, it was kind of a culture shock where it's like, hey man, you have to adapt or you're going to be out of here quicker than you thought. And then just from that today, seeing the shift of where everything is today. But let's be honest, the tangibles are the same. You have goals, you reverse engineer it, you hit those goals, you have people coming in, you have SOPs to run your playbook. It just comes down to three things, in my opinion: people, processes, and systems. It's just, what are those people, processes, and systems? And I think over the last 3 decades, right? I don't want to age myself too bad, but I think that's a big learning curve, going from the 90s and then even working in that pizzeria like in the 2000s, and then Muscle Maker in the 2010s, and Trifecta today. But those three things have always held true.
Walk me through Trifecta Credit Solutions today. Who's your ideal client?
That's a tough one, man, because it seems like as we evolve, like that's also evolving too. I mean, my ideal client, like credit's always going to be the foundation of our company. Like we have our team for that. It's kind of almost like a separate business anymore. But my ideal client, I love newer people, and I think a lot of that has to do with the credit side. So if you have a new business owner or a new investor, I love that, because I think a lot of people forget about them, right? Oh, they're new. We don't want to deal with them. We don't want to get a start. But I love startup businesses. And this isn't taking away from existing businesses. I love them too. But pretty much anybody in business and real estate, I love that B2B conversation. But my special heart is always to the newer people, because I feel like they get written off, and a lot of people come reaching out to us because it's usually because of a credit situation, right? Hey, I'm trying to get into business and I have this problem. Nobody wants to talk to me. Okay, well, what's your problem? Or, hey, I'm looking at this 4 unit, traditional bank doesn't want to talk to me. Can you help? Okay, well, let's figure out what the problem is. And I think the cool thing that we've done, locally, is create some rooms here for people to come in, be a part of community, and kind of, have a hand out to help them a little bit more. I mean, we've done that in on the real estate side. We do a cigar event here every quarter. We get a lot of new people into that room, a lot of new faces, a lot of new investors, and we have a lot of seasoned people in there too. But the conversations and the things that you see happen, people getting their hand held on their first deal, or somebody coming in, hey, I need 50 grand or 100 grand for my first deal. And down, like, hey, I got you. Like, let's figure this out. Like, let's make it happen. Or just the Credit to Capital Facebook group that I have, people coming in and asking questions and so forth. Hey, I need to buy a house, but nobody's really telling me how to get credit ready, or to buy my first home. Or even business owners in there. Hey, I'm looking for a resource. I need a $250,000 line of credit, and I keep getting shut down. So, those are, I love the B2B space, but I love the newbies, man.
Yeah. So are you mostly working with individuals, entrepreneurs, real estate investors, business owners, or a mix of that?
Yeah, it's a mixture of that. It's starting to lean more to B2B. I'm seeing, and the reason that I'm saying it's leaning more towards that, you're actually having a lot of people that still have credit. They're not in a business yet, but they're getting ready to start a business. I had a call earlier with somebody today that he said he wanted to buy a house. He's like, but actually I'm looking for funding and I don't like know where to start with my credit. I'm looking to buy a bunch of box trucks and start a hauling business with that. I said, okay, awesome. I think you're going to see a lot of people start launching businesses in the next year or two. I mean, that's just my take on it, for who knows, a plethora of reasons, right? So a lot of people coming in are looking to start a business. I think real estate, one of the things that COVID taught us was, and it showed in the individual real estate market with people buying homes, and this is where everything sprouted up with business funding and private real estate, was when people were coming here, and you live in the kind of the same area sandwiched in between New York like that. So when there was that mass exodus of New York and people buying homes for 50, 60, 70,000 over asking in cash, well, guess what? Everybody's going to get outbid. You don't need credit. Credit doesn't exist at that point, right? So that shift happens to businesses. Well, hey, times are tough. I need to make more money. Well, I'm going to start a new business. So I think when one part of that industry flourishes and the other one's going down, it's almost that pendulum's going to swing back and forth. So right now it's geared towards business and investing. And I think it might even get more closer to investing, especially in my area, because of some industries that are coming here over the next 5 years. We'll see, man. There's always a 5-year gap that I've noticed between that when this stuff changes. Who knows? 5 years from now, it could be all credit and then everything else slowing down. It's just one of those things you just got to keep an eye on all the time.
Dave, when someone comes to you, what's usually broken first? Is it personal credit, business credit? lack of documentation, lender positioning, or just not knowing where to start?
I think it's a mixture of all of them, really. Like it coming down, not knowing where to start, like mixing it in. But credit's always going to be that baseline. You know, you have that myth out there. Hey, even with good business credit, but I still can't get approved. Well, okay, they want to know who you are. They want to know who's the person signing the checks. Most of the time, you're always going to have some type of PG or personal guarantor on that. So I would always say credit and personal credit to answer that's always going to be the first issue. Every time somebody either comes to us or gets referred over to us, it's usually credit first. Being in that funding space per se, people know about it, but it hasn't built up like the whole credit base. I mean, me alone, 10 years, right? If people ask you locally, right, hey, what am I known for? They're gonna say, oh, that's the credit guy, right? And a couple of them might say, yeah, he can get you money and get you capital and all that stuff too. But it's usually going to be that credit side or personal credit side first. But a lot of that is tailored. They don't really know where to start. And if they don't know where to start, it's always, hey, man, I can't get my head around this credit issue. Like, what's going on?
Dave, you made a point on our LinkedIn conversation that really stood out to me. You said a lot of operators wait too long to think about capital until it becomes urgent. Why is that such a dangerous mistake?
Well, I think number one, going back to where this conversation started, it's lack of knowledge, right? It's always, hey, I'm going to get it when I need it instead of getting prepared when you don't need it, right? It's like that show Preppers, It's like, hey, let's prepare for the worst. And I think a lot of people, because of credit or understanding how to get prepared for these things, or a lot of people, surprisingly, don't even think they can even get access to some of this stuff. Where it's like, hey, I've only been in business for 2 years, or hey, I only made over the last 2 years, $100,000 a year in my business. Like that's not for me. I think they're also afraid to ask. They're not asking the right questions. There's not people just putting enough stuff out there to kind of say, hey, you can get this, right? If you have this, this, and this, you can. And I think also on the flip side, on the bad side, there's a lot of bad information out there almost guaranteeing that you can get certain things when you can't. You still have to qualify for things at the end of the day, but a lot of people do make that mistake to where they wait too late. Business owners, they'll accumulate a lot of debt, a lot of credit card debt, a lot of debt, and then they want to roll it over. And it's like, well, you're overextended, or you're maxed out. There's pretty much almost no bank that's going to want to take that risk. There might be one or two, but then the interest is going to be very high. But there's always ways to strategically kind of get out of that. But it's lack of knowledge and lack of confidence.
Let's talk about credit score. A lot of people think that the goal is just a higher credit score. You seem to look at that differently. What's the difference between having a better credit score and being fundable?
Well, that takes time. Everybody's always jokingly comes in, well, hey, I want an 800 credit score. And I always ask, well, why? Tell me why you want that. Well, because it's high credit. It means I could get everything. And it's like, well, yes and no, right? I look at that as the buffer. Number one, I look at that as, well, you're not using it at that point then. Because if your credit's perfect, you're not using any of your credit cards. If you have an auto loan, maybe it's already close to 5 years old, or it's aged out. So once you pay that off, your score is going to dip anyway. You're closing the account out. Maybe you've had your house for, 7 or 8 years. So that's aging out a little bit. I used to think that way, like even in the industry before I really started helping businesses and investors directly with capital. Oh, you got to have this great, perfect credit score. And it's like, well, that's not true, because even if you're above 700, 720, subjectively, some people might say 740, depending on the institution. It's like, you could pretty much get anything you want at that point. Like that's the barrier of entry. And I call them doors, right? There's other doors in there. Well, credit score is the first door, right? Okay. Now you get in. What's the second door? What does the data look like on that credit report? Okay, cool. You have enough trade lines. Okay, what's the third door? Well, let me look at your inquiries. When have you been asking for credit, or what's the last time you came in? So I think that whole high or holy grail credit score, I think it's overrated. I think it's a marketing ploy, if you really ask me. Really, if you break it down, what does an 850 credit score mean? It means you have an 85, right? Take the zero off the end, 85% chance of paying us back. That's really all that means. You have you have a 700 credit score. Okay, drop the zero. You have a 70 chance of paying this back. And that's really all that means. I don't get caught up in that too much. But being lendable or fundable, okay, I'm a first time homeowner and I need to get an FHA. Okay, great. Well, time and money. And that's how I've always looked at it. Well, okay, come here and get the 750 credit score, man. You'd be perfect. Well, that could take some time. That could take a year or two, depending on what the profile looks like. But hey, I'm getting an FHA. Okay, you want to be a high tier FHA? Once you're at 620 and above, doesn't matter what you are after that. Let's shoot for that. Okay, well, 6 months later, you could be a homeowner then. So that, yeah, that time, and then the cost to get there is a lot. That barrier of entry is a lot smaller. So I always look at it as speed and time, because again, going back to the market and the people that are out there in this industry, oh, it's going to take you 2 years to get that. Oh, it's not, right? Like, what's the target? And that's why I always ask what the goal is. Well, I need some business credit cards. All right, 680 and above. That's the target. Once you're at 680, they'll all fall in line. It's all the same. I need a business line of credit. Oh, 700. All right, let's shoot there. No charge-offs, no collections. Okay, we'll figure it out as we go along. If we can't get that removed, how to settle, how to get that taken care of. I need a DSCR loan. Okay, 660 and above. Let's go. You need a private DSCR loan? There's a target. It's all about hitting the targets. I think, why prolong something? Somebody wants to either get their dream home or get an asset or start a business. Why do people in this industry want to prolong that and put that on? Well, I can tell you why. It's greed and it's selfishness on that company's part. So you don't need to do that. It's what's the target and how much time are you looking at? How much time do you need? Oh, I want to do it in a year. Okay, doable. Well, here's the target, 620. Let's go.
Can someone have a decent credit score and still not be positioned well for capital?
Yeah, absolutely. Or even a mortgage, right? For any type of capital. So a lot of times, and I've seen it happen recently. Hey, I have a 720 credit score and I got declined for a conventional mortgage. Okay, well, that usually tells me either you have too many inquiries right away or your profile's weak. Tell me about your credit report. Do you know what's on there? Yeah, I have one credit card. Well, there's your problem. Well, what do you mean? Well, it's one credit card. You don't have enough holding there you look like a risk. So you can actually look like a risk not having enough. And a lot of people don't understand that. It's like, look, you want to have, my rule of thumb is always have 3 to 5 trade lines. I don't care what combination they're in. You definitely need a credit card because it's 30% of your credit score. But whatever that combination you have, say 2 or 3 credit cards, maybe some type of installment piece. If you don't have a mortgage, maybe some type of rent reporting, just to have it on there to show that you can handle multiple trade lines. Underwriters are going to like that. So if your profile is too thin, yeah, you can get declined. I've seen it happen a lot more frequently than not because people assume, hey, I have one credit card, my credit's good, and I'm good to go. That's not what they're looking at. They want to make sure you can handle it.
Let's talk specifically about real estate investors and operators. When real estate investors come to you, what are they usually trying to accomplish? Buy their first property, scale their portfolio, access business credit, get better lending terms, prepare for private or direct lending.
Yeah, sure. It could be a couple things, like in our area, especially. A lot of times even some refis, right? Hey, I have this plethora of properties here. I have 8 properties. They're all on traditional lending. I want to get them out, put them, obviously I have a guy right now, he doesn't have any of them under an LLC, which is risky. So it's like, but he has equity in it. Hey, let's roll this over. It's 12 properties, right? He's probably got about $500,000 in equity at least on the bare minimum side. Okay, roll it over, take that cash out, financing your next deal. Or it could be, hey, I found a fix and flip loan that I want to do. I went to a sheriff's sale. All right, cool. There's some unique strategies with business credit too, talking about a credit card stack, liquidating the cash, being 100% in, but not at 100% leverage points. You might have 20% of somebody else's money on the front end and 80% on the back end. So those are the different things looking at investors coming in. It all depends. Hey, we got a new guy, right, coming in. My credit's a little shaky. I have no experience. Okay, take this outside of credit to capital now. Hey, come to our room, come to our event. Why? There's other people there that have money that don't want to do the work, and we can help you get in with them. Or, hey, did you ever hear the burst strategy and how it works? Going back to 0% stacking. This is how you can do it. This is how we can build you there. Hey, what does your credit look like? It depends, man. It's never the same, and I actually get fueled up on the conversation like every single time of whichever one it is, because I always look at it as there's always a solution to that. And what are you looking for? And let's figure out the solution. I don't care if you're new or if you're seasoned.
How has the capital environment changed over the last few years?
Well, it's changed It's changed a lot, and I think a lot of it has to do with credit card debt. For those of you that are unaware, just debt alone, but the credit card debt is massive. It's pushing $1.3 trillion. And that's just on the personal level. That's not including businesses. So banks are tightening up in general. I think on the investor side, you're going to see a lot more investors probably go the private route because of I don't want to say it's easy, but ease of getting in, barrier of entry to get in and out quickly. That space, they know underwriting knows what they're looking for in terms of property. They're looking at the property, not the person. I think with where just this crazy debt problem right now, it's definitely tightening up. Limits are getting cut down. Will it get better? Yeah, I think it will get better over time, just as in everything ebbs and flows. But right now things are just tight. And this is why I explain the importance of always having good credit, keeping an eye on it, and back to what you said earlier, getting things when you don't need them. I think that's important now more than ever. If you are carrying a lot of credit card debt and if your score is pretty decent, get a debt consolidation loan and get rid of that as fast as possible. If you can dump that in 5 years or less, it's better than holding it for 25 or 30.
Let's talk operations wise. When things get busy inside of Trifecta, what usually breaks first?
Me. Now, it's usually something between the team. Usually it's always some type of internal communication. One of the things that's AI has kind of helped is kind of to centralize everything, to not have as many moving parts. Like if you have, say, for example, like a CRM over here, but then you have another piece of software over here that we're using, or if we're talking to the team on in a Google room. Now, I think when you're dialing that communication down or dialing into one system, this is where AI has helped us a lot, is to get that centrally located so everybody's on the same page. And that's going back to systems, processes, and people. If you can take the people and a system, right? And just, that's out of those three, I think those two are the most important, and dial them in better. It's going to help you to prevent more bottlenecks or breakdowns of something going on in your business.
Dave, where do you personally spend too much time? What parts of your business still requires too much manual work?
The gift and the curse. I think I've actually started implementing this since I got back, but like keeping an eye on all the inbound conversations coming in. I think as owners sometimes, and that's a bad habit I've brought over from the restaurant industry, like, because our bloodline or our lifeline is people calling in orders, right? And a lot of times here it's not even calling in orders, it's more like problems. And it's like, hey, let my back end team take care of that, let client services, let my assistant. And now it's just, hey, keep an eye on the conversations tab. If somebody needs me directly, please let me know ASAP. And since I've loosened, that was always the hardest thing for me to loosen up on, because I always felt like, hey, you got to get back right away. Customer service, like, get back to them right away. But then I started to find out, it's like, somebody asked me one time, it's like, hey, you get back to me so quickly. Like, what do you do during the day that you're a vet? Are you doing anything? And I'm like, man, that hurts. That one hurt real bad. I'm like, oh, you know what? They're right. But if you get some back to somebody within the same day, it's, they're busy too. Like, a lot of them don't even check half their text messages. They got 100 missed text messages on their phone. So I've loosened up a lot on that. That was always a big problem.
As Trifecta grows, where do you start to feel friction? Is it on the front end, bringing in qualified people, or is it once clients are already in the process?
I think it's always when the clients are in the process in that back end sometimes, because I know what I control and like who I am and what I do. Like if I take a call, right, and they know me, they're expecting me. But if you have a back end where you're dealing with hundreds of people, then at that point in time, and then somebody, if they're used to speaking with me, and now it's like, all right, well, you're in client services. So now you have maybe this person or that person. And then sometimes it could be friction there. Well, hey, again, going back to the phone thing. Well, hey, Dave got back to me within 5 minutes. Like, what's going back on here? And it's like the gift and the curse. It's like I shot myself in the foot with that. So now that expectation is always going to be with that on the back end. But I think it's always when you have moving parts, when you have the funding side, the real estate side, and the credit side, when you have those three parts kind of moving together, sometimes it can be very smooth. Sometimes maybe something can slip through the cracks, and you just got to do your best or always improve to make sure those things don't happen.
How do you separate someone who's serious from someone who just wants a quick fix?
Ask a lot of questions. The answers will tell you everything you need to know. A lot of people, I could tell right away if people are shopping, if they're just, if they're looking, if they're coming in on price instead of value. I can always tell they're looking for simplistic and fixed. Like if somebody's coming in for the value and wants a handheld and is serious about the journey overall, whether that's credit or capital, then I know they're going to be in it for the long haul.
Part of the client journey is hardest to scale without losing quality.
Ooh, wow. Hardest part to scale without losing quality. That's interesting. Well, it's always going to be on the credit side because that takes the longest time, right? Like that hard part, it's unpredictable. And a lot of people don't understand it didn't take you overnight to get into that position. It's not going to take you overnight to get out of that position. And with the credit side and the way the laws work, it's always a 30-day cycle. It's like watching paint dry. We don't control that. That's the laws from the credit bureaus and credit reporting. So we're kind of bound by that, but it's hard to explain to people, hey, this could be 6 months to a year. Could it be sooner? Yeah. Could it be longer? Yeah. But you have to understand that this is going to take a journey. And by 60 days, what's going on? Why isn't this? It's like, listen, like we explain this, like this isn't how this works. And then usually that drop off, a lot of times, they'll quit, or it's like, hey, I'm going to drop out of here. This isn't for me. Or, hey, like I wanted to see results in 3 months, not 6 to a year. Like you said, well, yeah, that's the realistic expectation. Like, so that's always that hardest part of that drop off. People start getting impatient a little bit. And I understand, it's hard to understand that that stuff takes time. Like you kind of sympathize with them, but I think they're just so frustrated sometimes coming in that it's like, man, why do I got to wait this longer? And then the crazy thing is, not to get off on a tangent on this, because I actually saw it happen over the last couple of days. They'll call you back in a year or two and the problem still isn't solved.
Is there a point where education becomes just as important as implementation?
Always. No, every call, I don't care if it's for lending, and I don't care if it's for credit, always lead by education. If that call, because especially on the credit side, consultations are free. We don't charge anything up front. I want you to leave that call and say, man, I've learned more just from that call, even if I don't go with them, than anywhere else. And, that's always important. I always want somebody to leave with something that they know and that they understand and that they can control moving forward. So the education piece, it's paramount.
If you could remove one operational bottleneck from Trifecta tomorrow, what would it be?
Obviously, the whole phone chat. I mean, there's a lot, man. I mean, AI, obviously it's helping out a lot. I think the bottleneck is if there's a way, and we're working on it, because we have a certain kind of dispute software that we've actually utilized that AI's created, but now it's just to bring it into the CRM or have it communicate back and forth. I think really what I envision is having just one kind of central hub to where if you can have all these moving parts, they're just constantly communicating. And I'm not talking Zapier and back and forth. I'm talking like in real time, kind of like talking to each other. And I think that will solve all problems. And I know people are doing it. I turn into like a little AI junkie watching people implement and build this stuff all day. So, I think it's really quote unquote niching down your own systems. And when you can do that, that will solve so many problems.
Awesome. Let's talk a little bit about AI. This is the AI Edge podcast. Where have you actually seen AI or automation make a real difference in your world, if anywhere?
A lot, man. I mean, just in my morning, I get a morning briefing every morning. And by no means, I'm not a tech guy. I'm not a tech expert. But when AI came out, I said to myself, between the internet and social media, like kind of getting in later and that stuff, I said, I'm not going to be left behind on that. I said, I'll do what it takes to learn this stuff. So over the last 2.5 years, just with Chat GPT and now like with Claude, how that's coming out, Manus, Gemini, all these different tools. But, Claude has really helped me out a lot. I get a morning briefing every morning that looks at my calendar. Yeah, man. Like I said, I'm not a tech guy. It's just that one line. Hey, if you want to know how to do something, just ask AI and it'll tell you, and just put all this stuff together. So now in real time, 7 a.m., I get this briefing every day as to what I have to do, weighs out the importance of so forth of certain things. But that alone has changed a lot. Dan Martell and his book, Buy Back Your Time, like kind of how AI and his principles and that go together. I think I think a lot of business owners drop the ball all the time to where they're not constantly looking to buy back their time of minuscule tasks or things that drive them crazy, or like me, silly, checking the conversations tab all the time. So utilize these tools and help you advance forward.
Where do you think AI could actually help in credit education or capital readiness?
A lot, and I'm probably be the only person to say this in the industry, but listen, I mean, if you could use it to help you basically dispute your own stuff, right? Like I always tell people that up front, even before AI existed, like, look, this is just like anything else. Like you don't need a mechanic to change your brakes on your car. You don't need an accountant to do your own taxes. If you want to do them yourself, then do them, right? Like you have that ability. There's no rule that says you have to come to me to do it. Now, obviously, you should know some of the laws and so forth and what you're doing when you ask AI. But if you really want to dive down that road, sure, like you can help learn the Fair Credit Reporting Act. You can look to see if you have a violation somewhere. If you need, like we have an attorney partnership to where we'll sue credit bureaus on a client's behalf. You can look for that stuff. Now, granted, it is not a lawyer and is not the law. So understand, I'm not guaranteeing like that's going to work, but you can use those things to help you. Fundable, right? Like you can get set up for what you need. Hey, what do I need coming in? I'm looking for a line of credit. This is how much. If you have your QuickBooks or something tied to it, like Claude, hey, what do I look like I can get approved for right now? There's different things, but understand, full disclosure, that does not 100% mean you're qualified, right? Or everything's going to be perfect, but they can help you get there.
Could AI help pre-qualify prospects before they speak to your team?
Yeah, it could. I don't like it. I still like the old touch. I noticed today I was playing around just even with a credit report and it missed some things that I normally look at. So I think in the future, yeah, it definitely could. I'm sure it depends how you have your own setup. We're just not there or haven't at least figured it out yet to really work for us yet.
Where would you not want AI involved?
I still think the human experience is where I still think you should talk to people on the phone. I don't think you should have a chat bot, especially when somebody has a serious problem that's holding them back that could be potentially life changing. I think people want answers in that credit and capital space. I think really any business. And I think that's the only thing that will benefit businesses in the long run. I think if you have too much AI in there, people are going to want to go somewhere. Hey, they have humans working here. Hey, like you can actually get somebody on the phone. That actually bothers me. I didn't get a piece of software because I couldn't get somebody on the phone. It was the worst experience I had. And this is actually allegedly a top tier program or piece of software. I could not get an answer. I could not get a phone number. I had to find a sales rep to hop on a Zoom and try to get my question answered. Hey, we're going to get you to the tech team. And nobody answered my question. Nobody even had a Zoom or a calendar link.
Well, that's ridiculous.
And it just blew me away. And I'm like, yeah, like I never, just because of that experience alone.
Let's talk a little bit about trust. The credit repair space, it has a lot of noise, right? There are a lot of good operators, and then there's a lot of people making big promises. How do you build trust with someone who has probably been burned before?
A lot that the ad, going back to the ad campaign, I've heard some crazy stories and, even some big companies. The biggest thing is be honest. Just tell everybody the truth of how the industry works because there's so many, hey, you get your credit swept in 7 days. That's illegal, first of all. And second of all, you're going to land in jail, like you and that company. It's going to be a matter of time. Yeah, you're filing frivolous police reports, claiming sex trafficking. Like it's crazy. And people are still doing it. It's insane. And this is another reason where my content shift's going to go. I'm going to start calling out more people because of that. But be honest, tell people. And like I tell people up front, hey, this isn't overnight. This isn't going to happen in 30, probably not even going to happen in 90 days, right? This is a long, and if this isn't for you, I'm not your guy. That's it, plain and simple. I'm not going to compromise our brand, our integrity, and who we are because you're looking for a workaround. Or even better yet, a lot of people will think it exists. And then I'll tell them that, like, no, that's not how that works. This is how it works. You don't believe me, you can look it up. And if you really want to, if you want to believe me, you can look me up on Google, right? Been doing this for 10 years. Trifecta's been around for 6. I always say that's one of the first things I lead. And then the reason I say that is most of these companies you can't find on Google. Most of these people that come in and do stuff like that, they'll be gone in a year anyway. And then a new one comes up and then they're gone again. So look for people that have been around and have a track record long enough. So that way, you're getting the real deal.
Awesome. You talked a little bit about mental toughness and fitness. I love that you're an ex-athlete, right? You also
Yeah.
mentioned that, fitness and mental toughness as something you'd be open to talk about. So I love that because credit, capital, business, and fitness all have something in common, discipline over time. So how does fitness shape the way that you operate in your business?
I mean, it shapes everything for me on how I operate daily. If I don't get a workout in the first thing in the morning, my day sucks. Like it really does. Like it just doesn't go well. But I've learned that if you kind of break down your body and make that the hardest part of your day is going through something hard physically, it just makes everything else flow, makes everything so much easier. It gives you mental clarity. Because no day is going to be perfect, but it makes everything a little easier to handle as the day goes on.
Dave, let's have a little bit of fun. Lightning round, some quick hits. You ready?
Yeah.
Awesome. What's the biggest mistake people make with credit?
Not knowing where they stand with it, not having access to a report. Most people don't know anything. Do you look at a credit report? Have one? No. How do you do that? You'd be surprised.
Really? What's the
Yes.
biggest mistake entrepreneurs make before applying for credit?
Using personal credit for their business and then trying to get business credit cards when they know, or when their personal credit was good, that you don't need revenue per se to get business credit cards in the beginning. I think every business should, as long as they're in good standing personally, so forth, should get business credit cards right away.
What's one thing real estate investors should do before they find a deal?
Build a team. Don't go at it alone. I think get your team in there and treat it like a business. If you want to add one more, that you're not going to get rich off of $300 a month cash flow. Okay. So stop with that. But if you're taking it serious and treating it as a business, coming in, treat it as a team, right? Get your lender, get your insurance agent, get your title company, get your contractor, right? Get all your pieces and ducks in a row so you have your team of experts so everything runs smoothly.
What's one habit that's changed your life?
Change. Stop drinking by choice 2.5 years ago.
Congratulations.
Yeah, thank you, man. And I look at it as a competition with myself. I thought about having a drink down in OBX, but I was like, nah, I'm gonna keep the streak going. Because if I lose the streak, I'm gonna get pissed and I'm gonna have to do it all over again. But no, that's changed everything for me. Just my clarity and the fact that it's actually a really good conversation starter when you're out in some type of event, wedding, business networking event. Hey, you want a drink? No, I'm good. I got water. Oh, you don't drink? Yeah, no, by choice. And then they start asking you questions about the story and then why. And, it actually inspires some people too. So yeah, that's been a pretty big game changer for me.
What's one business lesson you learned the hard way?
One business lesson I learned the hard way. Don't trust everybody, even
I have a
especially,
hard time with that.
yeah, well, even people coming into your ecosystem, give the benefit of the doubt, but don't give the world to somebody right away. You'll get burned on that at the end.
What's one thing that you're improving on this year?
AI, like more and more to it, and I think the thing with AI that I'm really learning and eager to learn to improve is that whole coding aspect. It's probably something I'm overthinking, but that I know will be a game changer in and of itself.
Last one. What's the best advice for someone who wants to become capital ready?
Get all your ducks in a row. You know what I mean? Know your credit, obviously the first thing, and know what you want, but be ready to let it take the process. If you are not ready, understand it's going to take some time. And usually that's because of credit, but just make sure you have documentation and your credit ready.
Dave, for everyone listening who wants to connect with you, learn more about Trifecta Credit Solutions, or understand how to become more fundable, where's the best place to find you?
Yeah, follow me everywhere on social media at Dave Burgio on Instagram, Facebook, same. LinkedIn, I believe it's Dave Burgio Credit. You find me on there. Just use my name and you'll find me on every social media platform. It's probably overkill, and you can look us up at trifectacreditsolutions.com. If you find me on Facebook, give me a shout. I'll get you right into Credit to Capital. I have it private for now, but I think the more I think about it is I'm doing everybody a disservice. So I think I'm going to make that a public group.
I love it. Dave, this is a great conversation. I really appreciate you coming on. I think this is such an important topic because a lot of operators and investors wait until they need capital before they start preparing for it. By then, their options are usually limited. For everyone listening, if you got value from this episode, make sure you like, follow, and share with someone who's building. And we'll see you on the next episode. Dave, it's been a pleasure. Thank you for being here.
Louis, thank you. And thank you guys for tuning in. I appreciate it.